What's your take on the rally that we're seeing so far this year, especially when it comes to tech? And are those comments, are they kind of influencing, or are they similar to what you're also thinking about these tech stocks?
Sure. What we see happening is the market has been bullying the Fed to try to cut interest rates or at least slow it down and look for a reversal the second half of the year. And I think that's what's been fueling this market in the last month and a half has been the fact that expectation of a reversal in monetary policy. And when you have that, you have momentum chasing these high growth stocks, and you see the lower quality stocks starting to perform better. For us, we don't agree with that. We think there's plenty of information out there that leads the Fed to believe that they need to stay on the course, still continue to tighten interest rates. And we think the Nasdaq's ahead of itself, along with these lower quality growth stocks. We think interest rates will stay on a higher trajectory longer, and then market needs to react accordingly.
Well, it sounds like you were really fond of those Fed minutes that came out yesterday, because in those minutes, the members said they believe ongoing hikes will be necessary. The markets, they had a bit of a mixed response yesterday. The S&P fractionally lower, the Nasdaq fractionally higher. Is what you heard at all changing how you balance portfolios or your thoughts about bonds?
Well, for us, we're more long-term dividend growth investors. We do invest heavily in bonds as well, but it's not going to change our point of view because we believe the Fed's going to stay the course. Now, if the Fed we thought was going to do a complete reversal, then we would probably add a little bit more, as they call alpha, a little bit more aggressive into the portfolio, dividend growth-wise. That being said, we don't see it. We think the Fed is telling us that with higher retail spending, lowest employment rate, lowest unemployment rate in 53 years, they're still seeing wage inflation. So the Fed's going to continue. We think that's going to put pressure on higher growth stocks. It actually, I think, will benefit the dividend growth players more because you're getting cash flow now that you'll be able to reinvest at a higher interest rate. So we think the Fed, from our perspective, is doing the right thing, and we're investing accordingly.
You know, you're emphasizing you're a dividend-focused investor. So I want to ask you about two stocks yesterday that had some pretty big dividend news. Deere raising its dividend, Intel slashing its dividend by 66%. Just for all of our audience out here, as a dividend-focused investor, how does that shape your perception of these different stocks?
Well, it's a great question. We look at these companies and capital allocation strategies. So when we see companies expressing that they're going to cut or may cut their dividends, or they're lowering their dividend growth rate substantially, we're going to look to exit the company. If they do a hard cut like Intel did, we're gone. We do not invest in companies that completely eradicate their dividend the way Intel is doing it. You know, there's profit margin issues, there's volatility in their earnings, and the fact is they're not committed to the shareholders. It's a very capital-intensive business, Intel. And the payout ratio was 80%, so we knew they were being hurt hard. Deere, on the other hand, we look for companies that, like a Deere, that have a lower payout ratio, increasing the rate of growth in their dividends. So it's completely different. But we have a hard and fast rule. If you cut your dividend, we're gone, because that tells us that you have a long way to go to climb yourself out of the mess you put yourself into. And these capital-intensive companies cannot operate with an 80% payout ratio and volatile earnings and keep up with the dividends. So that scares us. And we go to the sidelines immediately on a dividend cut like that.
All right, Max, we got to get going, but we got to have a rule here on WEX. You got to give us one pick. Give us one pick of a great dividends-paying stock that you would invest in today, right now.
Oh wow, there's several of them. I think we like healthcare. AbbVie, the healthcare company, has done extremely well.
Okay,
it's going through
just one.
Just one. We would say healthcare. We like AbbVie.